Yo, so welcome back. This is going to be an update on this video that I did previously exposing financial education Jeremy's trash stock picks. That was the title of that video. Maybe some of you guys thought that I was being really angry and hating on him, so you guys showed me that there. That's the like to dislike ratio. 67% of you guys liked the video and the other 1/3 didn't, which is fine because that opens up discussion. Some of you guys agreed and some of you guys didn't. But this is a little bit of an update to see how he's been doing since then, which was October 20th when I made that video, and today is the 17th of February. If you guys watch Strongman Personal Finance's channel, then I'll be probably on his channel Sunday night on the live stream, so if you guys want to check that out, then go ahead. Other than that, like the video, and also check out the link in the description for an interactive broker's referral link. So, a lot of you guys wanted me to follow up, so here it is. The difficulty with saying whether or not Jeremy is right or not is because he always uses the argument that he's a long-term investor, which is true because he doesn't actually sell out of a lot of his companies and he actually holds for a long period of time, whether it goes up or goes down. I'll give him that, but it's difficult to say whether he's right or wrong because anything, like literally anything can happen in the markets in the short term. Like a stock can go up 3 times, 10 times, or whatever, and it might not have the fundamentals to hold that up. And what we have to realize in the long term is the company's fundamentals will be the largest factor in determining its future valuation. Things like stock trading volume, fears, sentiment will all come and go, but what is certain is that if the company looks like trash, it smells like trash, like some of his picks, then it likely is trash. So to the people who still agree with Jeremy and follow his advice, to the 1/3 of you who dislike that video, I'm not saying this to like berate you or to shame you or anything, but I just want you to consider my side of the argument for just a second. Does this guy look like a long-term investor? Like, look at this guy's videos. Look at these colorful thumbnails. I give up, I quit, ending my channel. The stock market crash is horrible, watch out. Like day-to-day news. If you need to make a video every day about your stocks, you're probably not a long-term investor, which is my argument. He seems a little bit worried about what the market is doing more than he should be if he truly is a long-term investor. Like, think about it. If you look at his public portfolio, it's mostly held up by Tesla right now. And that's his public portfolio. In his private portfolio, he probably holds stock that actually has value, like profits and free cash flow. So I'm just pointing out that I don't think he's very honest. And speaking of honest, that's the first company that I was talking about in that video. So let's take a look. I made that video October 20th. And since then, it's gone down 38.8%. Wow. Great pick, Jeremy. Like, if you take a look at what this company actually does, I don't think it's like very innovative. It makes like the baby wipes and stuff, right? And negative free cash flow. Okay, I'll give him that. It didn't really dilute much, but still, I don't see why this is such an exciting company when he bought it. Like, I think he started buying it in the 10s. I don't see how exciting it was, but anyway, moving on to the second one. It's Ttcf. Let's see. Down 34%. Why am I looking in September? I was making that video in October. See, that's the thing that I was talking about. Anything can happen in the short term. Like October 20th when I made the video, after that, you almost got double your money on this one. But then after that, I just went down 30% from the time I made the video. So if you were buying it and you were like, oh, yes, I made 2 times my money, you realize that in the long term, this is not even long term. But if you buy trash, you're probably going to get trash results. At least it actually makes free cash flow. It's positive, but it doesn't have a very long track record of doing so. So it's not something I would put a substantial amount of money in, especially when they almost issued like 50% more shares from 2020, which is a pretty big deal. Anyway, let's move on to Crsr. This is the only one that I said was probably like fine out of his picks because it makes profit, and that's a lot better than a lot of the stocks that he's been looking at recently. So it's down 10%. But if we looked like a couple weeks earlier, it would have been down like a quarter. And recently it got included in the S&P small cap. It got a small boost yesterday, but you know, we'll see over time. I'm not saying this one's the worst one. Like, the other 4 are arguably a lot worse. And then the last one was Planet 13. The weed stock. And that's down 28.6%. So honestly, I don't think he's been doing the greatest. That's probably why he needs to pump out a lot of videos to make the ad revenue back. And yeah, let me know if you guys think this is the face of a long-term investor. He's always making these, what's going to happen, bro? Like that kind of video. So I don't know. He's just appealing to his viewers' emotions to generate more ad revenue. That's just how I see it. And I just don't think this is healthy for the average investor to watch every day. because worrying about the market's up and downs is not something that the average investor needs to do. Why not just buy a broadly diversified index fund if you're going to worry so much about the market? Because when you do that, you don't have to worry. Like, sure, stock picking is fun, but if you stock pick based on what? Based on negative cash flows, you can't do that with a lot of your money. Otherwise, you're putting too much at risk. And if you're saying that I'm scared of taking risks, I like stock picking too. It's just that when I pick stocks, I don't like to see the company burning a lot of money and not generating a profit. Like, most of these companies that he recommends are not profitable, and putting a large portion of your portfolio in it is probably not the best idea. That's all I'm saying. So yeah, I'm pretty sure in his private portfolio, he has disclosed this before. He holds stuff like Walgreens, Skyworks, Meta, Facebook, basically. They all generate profits, not like all these stocks that he's recommending and holding in his public portfolio. He seems to be screwing you guys over, but I used to like his older videos better. Like his old videos where he actually talks about profitable companies. I think that was actually a lot more useful than what he's doing now, because nowadays he's just picking companies that have like high short interest. Let me take a look. Short interest. I think he just wants Wall Street Bets to pick up on his stocks. Yeah, especially these ones. I think he just wants Wall Street Bets to put a bunch of volume and then just have the stock have a short squeeze, and then he can claim that he's smart and he should listen to his stock picking advice. Because it's like Ttcf and Crsr, the ones that he pumps the most, or at least he did back then, like there's 30% short interest. So there's a lot of potential to have a squeeze. It's just whether or not it happens, that's remains to be seen. Anyway, that's pretty much all I had for an update. Like, I don't know. We need more people to point out what this guy is doing. Like, I think it's pretty scummy that he puts out a lot of videos promoting these unprofitable companies to investors that don't know any better. Like, honestly, I'd say that I'm pretty new to value investing, so I can't say I'm very experienced, because what am I, like? I'm like 20 years old or 21. So I can't say that I'm actually a great investor. I don't have a track record that's long enough. But what I can say is that you don't need to be super smart to know that investing a lot of money in an unprofitable company is probably a really dumb idea. So that's pretty much all I had to say. Oh yeah, one last thing I forgot after I stopped the recording. He was doing this comparison with index fund like VT, which is the broadly diversified global index fund. He was doing a comparison with that, trying to benchmark his stock picks to the performance of that index. Little do you know, or I hope his viewers aren't fooled by this, but he started his benchmarking February 14th, which is the low point for a lot of these small cap growth stocks. So anything can happen if you bounce off of the low point. It will look like he's outperforming, but just keep in mind that he bought these stocks at a much higher price than what his benchmarking says he did. So if you saw the prices that I pointed out previously in this video, Hnst is like 581, but he bought it over $10 if I remember correctly, because he was pumping Hnst like well before I made my video. And Ttcf, he bought like in the 20s. Yeah, he bought in the 20s at least, and he was averaging down. And Voyager, he was buying in the 10s. Crsr, he was buying like 20s and 30s. And this, I don't remember when he was buying this, so I can't really comment on that. So anyway, that's about it for this video. If you enjoyed it, make sure to drop a like on the video and subscribe with post notifications on to see more videos like this. And also comment down below on any videos that you want me to react to, like bad stock advice or whatever, or just anything, any ideas. And try to have a friendly discussion in the comments. Yeah, that's about it. See ya.